Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see that today market has created the new top on the daily chart. Here's overbought stance on the daily for today's session around 23.72, but we should not forget that market is already strongly overbought on the weekly chart. At the same time, as we already talked about this in the weekly report and previously many times, that currently market is driven not by the technical or economical factors. Here's purely the politics. So that's why the technical tools, some natural technical analysis here could have, well, limited application to the current performance. It's just partially could explain and could be used for forecasting and making suggestion. So in anticipation, for example, of the retracements or something of this kind, and you can see actually what's going on. So despite that market strongly overbought, even minor retracement can happen. And market following with the second scenario that we discussed in the weekend, we said the only thing that the bulls could do right now is following the trend, and we explain what setup is usually used as for a trading, what the framework used following the trade, riding on the trend. I will explain it today again, but for now I could say a few things. So first of all, this week will be full of events. First of all, this is inflation, United States, then probability of the response of the Iran significantly will increase day after tomorrow. So market once again will be in tension, but although it's not publicly commonly told, especially in the media, but I suspect that the recent visit of the United States delegation to the China and results of this visiting, so if you just read the press conference, it seems that, well, it's difficult to call it as a reasonable statement from the delegation of the United States. It thinks that it's suggested that, well, I don't know how even to call it. So if you already understand what I'm talking about, I will try to share with you this and why it might become the driver for the gold market in the weekly report, because as we suggest, it's important and could make long-lasting effect on the performance of the gold market. But currently, I just tell that might be the major driver for the gold in the nearest few sessions. Yesterday, this is, by the way, the reason why the gold has set the new top, and in the nearest few days as well. Currently, what we could do, once again repeating the statement that I made on the weekend, from the technical point of view, I can't recommend you guys for taking new speculative long positions on the daily and higher time frames. Only for investing purposes. If you're buying gold to preserve the wealth, accumulating it for a long-term holding, it's okay. We suggest that gold is still cheap, despite that it has jumped more than almost for the $1,000 per ounce. We still think that it should go higher. From that standpoint, using any minor pullback, it is possible to buy physical gold. But for trading purposes, currently, once again, we see the chances for a taking position only on the intraday charts. On the daily, we can't recommend to take shorts because we have obviously bullish context. For long entries, market stays at overbought. So it's a bit checkmate situation. So on the lower time frame, a few moments to mention. On the hourly chart, take a look that everything has happened as we said. The suggestion of the trading plan stands as follows. When you're trading overbought market on the intraday charts, your context is definitely bullish. You are watching for minor retracements in the shape of some patterns. So here's was, for example, A, B, C, D, last retracement to some predefined fib levels. So these levels were predefined in a weekend. That was based on this recent thrust. Once market shows this pullback, you could drop time frame even more, for instance to the 5-minute chart, trying to get here the minor pattern. In this case, probably it could be some kind of the engulfing, or we just even could check what was here. Right, you can see what has happened here. It's kind of the hand shoulders. I will not move back again, but you probably see it. That was the performance on the fib level. You could use it for taking the position as usual on the right arm, placing stop below, and see what will happen. And out at the previous top. That was the major thing in this strategy. Take a look what has happened. Market hits the previous top and now stands flat. It can't move significantly high because it overextended. That's why we recommend out at the previous top. This is how it works. Until overall context remains the same, trend remains bullish, market is overbought, you could follow this strategy. It is not very simple. It is a bit more complicated than just getting clear patterns and following. But unfortunately, this is the only scenario that we have. Correspondingly, by watching on the current performance, you could watch once again. I suppose only these 3 levels might be considered, because if market will drop below this area, it will be already a bearish reversal swing on intraday charts, and that will, well, it will be a bit different story. In this case, we should be ready for a deeper retracement. But until market stands above these lows, you could consider these levels. Most probable retracement will be somewhere to the confluence, and follow the same logic. Once market reach this level, drop your time frame, watch for possible reversal patterns on the minor time frames, taking the position and out of the previous top. So risk reward here will be very good. But the minus of this strategy is a bit more sophisticated. That unfortunately all that we could say about the gold. So nothing on the high time frames. By the way, also watching for a fall time frame chart, because when the market shows this type of action, very often some grabbers might be formed around. So if we'll take a look at the gold futures, you could see what has happened on the fall time frame chart. Particularly last entry opportunity that I'm just explained was also the grabber, has been confirmed in grabber by the on the fall time frame chart. And here's once again another grabber has been formed, another grabber. So these patterns also might be used for trading in the same direction for the outs at the previous top. So for instance, if you have missed entry at some point on the fib level, market start moving higher, but you've got the grabber, you also could try to use it until it is working, until it hasn't reached the target, and out at the target. So that's in towards what we have. Let's keep watching first for the inflation, and then it's very thrilling what could happen by the end of the week.